Pain is the name of the game right now, and that's exactly what we told you would be happening. But the reality is, this isn't a victory lap. I don't really care about calling bearish moves. There's literally no glory in this, because I'm not shorting this market either. I don't make money from calling a short. I'm just hoping to save people painful losses as I am myself, because what I did last bear market was atrocious, and I'm not going to repeat the same mistakes. What I'm seeing right now is the combination of a real recession, real sticky inflation, something our country hasn't experienced in decades, and a crypto downturn of titanic proportions after one of the biggest everything bubbles in history. The whole point is these things just take time to work out. But let's dive into this, because Jerome Powell gave us the keys to the kingdom in understanding what the Fed policy and what monetary conditions will look like for the foreseeable future. With his remarks from Jackson Hole today, we now understand what we can look forward to, and one word jumps out more than anything: pain. I'm going to be helping get you through this, because on the other side of this pain is what I believe is one of the best, most important investment opportunities in history, bar none. So let's go through what happened today, the remarks from Jerome Powell and the Fed, how it's affecting the markets, and how, of course, we can make money off this in the future. As always, if you're excited, destroy that like button. Make sure you subscribe for more updates with that bell notification on, as we're not stopping. We're going to be bringing you the most important information here throughout this crazy and volatile bear market. Jim Bianco here has a great summary of the events. He says, my take on Powell's 8-minute, 28-second, 6-page speech this morning. Every sentence in Powell's speech has been said many times before. Nothing new in this regard, but I believe he focused on just one idea: no pivot. Now, I don't know if you guys were following along, but Crypto Hayes, Arthur Hayes, who has an amazing theory that I believe will prove itself out eventually, was also predicated on the fact that inflation coming down just a tick means it's time for the Jerome Powell pivot. And I said, no way is that the case, that they can celebrate 8.5% inflation. The pivot has to come when inflation comes back into a reasonable territory. We'll talk about exactly the timing of this pivot and where I see the dump truck of risk-on investment coming at the end of the episode. So make sure you watch all the way through, because this is super important. According to Powell, even if the economy and markets take a hit, and even if markets and the economy are slammed, it will not change anything. No pivot. No pivot.
No.
This does not address how much more likely they are to hike or where the terminal rate is. Powell took about 8 minutes to emphasize two words: no pivot. Sin pivito. Finito to the pivito. And I don't really speak any other languages, so I'm sorry. More tweets, a direct quote here: while higher rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses. These are unfortunate costs of reducing inflation. Once again, the boogeyman of inflation has reared his ugly head, and until he goes away, we cannot expect for the Fed to play nice guy and to save our bags. That will come later, and inevitably it will come, because the economy is certainly not in a place where you can just crush the average worker and household forever. We'll talk about the long-term thesis, because this particular approach, while painful short-term, will set up one of the most important plays long-term that I believe we've seen in probably forever. Now, as Dylan Leclerc says, how many times did Powell refer to Paul Volcker during that 10 minutes? Remember, Volcker was the one who raised interest rates to 20% to squish inflation back in the 80s, and probably saved the US dollar and the American economy in doing so. Now, I want to reiterate that we were hoping, really hoping at the beginning of the year for a pivot in Q3, Q4, or towards the end of the summer. Now, given this extended Q3 rally, we're hoping that maybe it would come in Q4, but given what Powell is saying right now, I'm not so sure we might see that unless we get a horrific crash here in the near future. But as one reply guy says, did you give up hope that we would see it in Q3 already? Don't quit in the 7th inning. It may still happen. September has been historically bad for Bitcoin. And I said, we rallied so hard, I can't see the bottom in Q3. Now, hopium and what we expect in the future often changes based on new information. If that is too much for you to understand, that in a world of probabilistic outcomes, 60% likelihood of this, 40% likelihood of that maybe, just maybe, it would be the 40%, then you're in the wrong business, because markets are all about probabilities, not certainties. And that is, of course, on a short term. I believe that you can reach a far higher degree of certainty when you look out into the long term, which is what we're trying to do here every day on the channel, is combine short-term theses with long-term theses to get ourselves into a position to make some effing money around here. Now, of course, the memes start rolling in. Live shot of Jerome Powell taking a leak on my portfolio. No surprise, Bitcoin and the crypto markets are pretty much a bloodbath right now, with Bitcoin down almost 5% on the day and looking to push below that prior all-time high number, that psychological number that I believe is more or less meaningless right now in these conditions. A prior all-time high in a macro bull right now, in a macro bear, a macro recessionary environment with unprecedented monetary conditions, it doesn't mean anything. It doesn't mean anything. We'll talk about what does mean things in a second. The point is, the boogeyman is inflation, and one of the biggest causes of inflation has been the cost of energy. The cost of energy has been skyrocketing, and good news for that. Well, OPEC has decided that even if inflation and oil costs start coming down, they're going to cut output to keep prices at an elevated level because they know it stings. They know it stings this regime a lot, and they're looking to cause some pain. So whatever wins we might actually have due to Fed policy might be undone by oil prices being kept sky high, even if they're being kept high artificially. The point is, we don't have any relief in sight. And when the cost of energy goes up, the cost of everything goes up. Food, transportation, products on the shelves, everything goes up with the cost of energy. Map of the day, day-ahead electricity prices in Europe are eye-watering, with lots of countries setting record highs for the day. Notable, see the Nordics close to $400 per megawatt hour, and Germany at $600. Before 2020, anything above 75 to 100 was considered expensive. Hashtag energy crisis. Here's a closer look at the map. And one final word from the Twitterverse, it would benefit most people to drop everything and play RuneScape for the next 9 to 12 months. Well, not RuneScape, but we'll talk about that. So here we are. Jerome Powell and the Fed has made it very clear. There's no pivot. They're not coming in to save the day. There is no change to the course of action of reducing inflation. They know as well as anyone that inflation is sticky, that it's not going away as easily as a few months of raising interest rates to levels that were historically seen as normal. These are now being seen as aggressively tight. Well, guess what? More interest rate raising is in the cards. And most importantly, there is no pivot in the short term. So people can stop pricing that in for now. I know a lot of people had been pricing in this pivot. But most importantly, in my opinion, what people have been underestimating since the beginning of this whole bear market is the x-axis, which is time. People need to understand the amount of speculative excess in the market, which creates inflation, is what has been the demon they need to squash, in addition to higher cost of goods and services. There's actually a ton of degeneracy out there in the market. Once that gets brought back down to earth, they can then resume stimulating the economy, which they must and they will, because otherwise there's a very real chance that the recession or the economy as a whole could have something break. And that's something that has a huge existential risk for the entire economy. So understanding that oil is in a precarious place, and of course that the US, European, and Chinese real estate markets are all in extreme bubble territory and have potential to truly crack, especially that of China. Well, all bets are off in that case. And the best way to handle this is just to be on the sidelines, watching, studying, planning, but not doing anything. Sometimes the hardest thing to do is nothing at all. And that's what we've seen. Every major trader I've seen has reported staggering losses since the beginning of the year, and that they're just getting chopped around and getting beat up by this market. So unless you're an absolute legendary trader like Eric Crown, go check out Eric Crown Crypto. He's an absolute legend, but he's got over 2 decades of hardcore trading experience. You can't just be like Crown. But it's always good to listen to him. Definitely subscribe. So what happens after all of these changes take place? Well, after these changes take place, we're going to see a pivot from the Fed. There will be a pivot. And when that happens, it's time to back the truck up, because risk assets, tech stocks, likely real estate as well, will have been delivered a hit not seen in multiple decades. That means that we're going to see some seriously crazy buying opportunities. And I'll be there with the dump truck to be buying up all my favorite assets, planning for what the world looks like in 2030, planning way out ahead, because seeing things go onward and upward back to the moon right away, it's not actually a sign that the economy has reset and demand has normalized. This might take a while, but in this case, fortune will favor the patient, and I will be there to meticulously accumulate the assets I believe will define the next era of our life. And I sincerely hope these videos are helping you control your FOMO, control your emotion, and understand the journey that we're all on together. As always, my name's EllioTrades. If you enjoyed this, make sure you smash that like button and subscribe with the bell notification on. You can find me on Twitter at EllioTrades. I've been tweeting a lot of crazy good stuff. You definitely want to follow my Twitter. It's very, very good content, if I do say so myself. As always, thank you so much for watching, and I'll see you very soon on the next episode.